Let's talk about the 2024 election here. It is coming upon us here. Within 24 hours, you have Harris versus Trump. Which person will win, and how will that affect the stock market the following day? Over the last 2 years, you've seen a lot of volatility come into the markets. You take 2016, the market was down a full 2% the week before, and then the week after, it rallied about 3.8%. Even more so during the 2020 election, it was extremely volatile. It was down over 5% the week before, and then it was up over 7% in the week that followed. So let's go ahead and take a look at each. Right here, you have a huge candle that took place on election night. This is the S&P 500 E-mini futures. Now, the futures actually limited down that night. And I remember this quite well because I was actually short on the market that particular night. I thought Trump would win. I thought it would bring in a lot of volatility into the market because he was a relatively unknown commodity in terms of how he would be as a president. He was an outsider. And so to me, I thought that, all right, the market's going to probably respond negatively. And so I expected him to win, even though most of the media was not expecting him to win. So I went short on the market. But to my surprise, I did not make money off of that short. So what you ended up happening is you had this huge limit down. I'm thinking to myself, all right, I'm feeling pretty good about being short on the market here. When he was winning, the market was selling off. But by the time that the market actually opened the following day, it was almost at break even. So I got out for like a small profit. I did not make much off of that trade. It was kind of disappointing because I saw myself up like over 5% on the trade overnight. By the time the market opened, it had wiped away all of the losses from that night before. From the lows to the highs, it rallied over 5.7% on the S&P futures. That is an incredible amount. We were actually limited down, but finished the end of the day in positive territory. And of course, we rallied 4% thereafter that week. So the S&P 500 was extremely volatile. Now let's fast forward to 2020. Now this was a pretty volatile year. The market had sold off incredibly because of the economic shutdown that took place in February, March, and April of that same year. The election was on November 3rd of 2020, and it was actually a fairly strong day, even though the full week before it was down over 5%. But still, there was volatility that night from the election results. You can see where it went down as low as 36.92, went as high as 38.50. And that, from low to high, that was about a 4.3% move. So we had 5.7% low to high move in 2016. We had a 4.3% low to high move in 2020. I would expect there to be another significant move following the results Tuesday night. So Wednesday, I expect it to be a very volatile session. But even still, that was a 161-point move on the S&P futures on Wednesday, the day after the election. Extremely, extremely volatile day. Now you look at it on the S&P 500, 161-point move like what we got in 2020 would equate to about a 245-point move on the S&P 500. We got something similar to that back on August 5th. If you recall this huge gap down right here, that was a pretty significant gap down. And it would be likewise something similar. So if you just split the difference here, 120 points to the upside, 120 points to the downside, essentially, you're looking at a move that would probably take us around this 58.32-ish mark, and then a move all the way back down to about just below 5,600. So on election day, what we could end up seeing is a candle that looks something like that. Not necessarily the body, but I'm just talking about when you take into account the shadows and the body on that candle, it's going to have something of that size. Now, if you're talking about a 2020 result, you're looking at about a 330-point range then. So let's add about a 40 or 50-point addition to that range, and you could be looking at somewhere around 58.73 as a high of the day, and somewhere around a 55.58 low of the day. That's what it would look like if we get the kind of volatility that we saw in 2016. So the whole point of this is that election night's almost like an earnings type of event for the market as a whole, just like what you see on stocks individually. It's not an earnings event, obviously, but the kind of volatility and the kind of impact that it can have can be similar, like if you were holding Google or if you were holding Meta through earnings or Amazon. It can have that kind of impact on the overall market this election. Also, what you can expect is there to be extremely high levels of volume. But if we get a range like this, you are talking about some very high levels of volatility. Now, what have I done? I'm cash right now. I got out of my positions on Thursday of last week. I was 100% cash. I could have added something on Friday. I even had a couple of good setups today that I was eyeballing. I was looking at a breakout on on General Motors that looked pretty good. Hood had this terrific looking bounce play that was forming off of the 50-day moving average and off of the support level. But I didn't take it just because of the fact that I didn't want to hold it through the election. I didn't want to hold a stock that can be pretty volatile just in general and then have that amplified by the results of the election. So I went ahead and held off on that. And like I said, I was mentioning GM, really beautiful bull flag there, really nice setup, started to break out today. That could have been a really good one, solid reward risk ratio. But again, I didn't take that trade setup either just because I'm playing it safe now. Going into the election, not going to take it. Now, come Wednesday, when we get a little bit of a feel for where the market wants to go, and what I've noticed over the last 2 elections is that there hasn't been a lot of uncertainty once the market opens. It usually picks a direction and it runs pretty hard. The volume comes in pretty strong. So I wouldn't expect a ton of back and forth. Not to say that it can't happen, but if we're basing it off of past precedent, I would expect the market to trade with some conviction come Wednesday. Now, the big hangups that could cause a lot of problems for the market is if both candidates declare victory. That could happen, especially if you have some close results, or if you have an electoral tie, and that's possible too. You could have both candidates end up with 269. So there's definitely some possibilities out there that create market volatility, much more so than what we might be expecting. But to play it safe, at least for me, I'm going ahead and playing it in cash. I'll let somebody else do the trading. It's not something that as a swing trader that I need to be involved in. And so when you know that there's a heightened level of risk and that you don't have any clear understanding of which direction it could go, because nobody knows how the election results are going to play out from a risk management standpoint, regardless of what I believe politically or what I hope to have happen politically, I have to separate that from my trading and from the stock market, because the market doesn't care about what I think or who I want to win. I have to base my trades off of what I see on the charts. If you enjoyed this video, I would encourage you to like and subscribe to this video. And let me know down in the comments below. Sure, tell me who you're voting for. I'd be curious to hear what you think. Maybe it gives us a little bit of a sample size here of what people are thinking. But also, what do you expect from the market as a result of the election day? All righty. Thank you, guys, and God bless.